All right, ready for this? Today we're diving deep, really deep, into the mind of, well, you could say an investing legend, Warren Buffett.
Oh, yeah, the Oracle of Omaha.
Exactly. We found this awesome YouTube video, and get this, it's Buffett himself sharing his wisdom on, building wealth. And I think even if you're not like a Wall Street whiz, there's so much to learn from his approach.
Absolutely. What I find fascinating about Buffett is how legendary success really boils down to these core principles, and they're principles that anyone can grasp.
Yeah, for sure. And right off the bat, he tells his story about getting into investing at 11 years old.
11. Wow.
No, right? It just shows how early that fascination with the market started for him. And he even talks about, trying to time the market and all those strategies that he even admits were profitless, but in his words, a lot of fun.
Yeah.
But what's really interesting is how he eventually shifted to a much more disciplined framework for investing.
Yeah, it's almost like that early experimentation, kind of messing around was crucial for him to realize, hey, I need a solid investment philosophy. And one of the biggest principles that guides him, and it's something he got from Benjamin Graham's book, The Intelligent Investor, it's this idea that a stock, it's not just a ticker symbol. It's part of a business, a piece of something real.
Right. It's not just numbers on a screen.
Exactly. And it makes you think, how many people are out there just looking at those numbers, those ticker symbols, without truly understanding the actual company behind them?
He actually brings that up.
Yeah.
He talks about how when he was younger, he knew all the ticker symbols, but didn't really get what those businesses actually did.
It's like memorizing, I don't know, baseball player names, but not understanding how the game is played.
Perfect analogy.
Yeah.
So then how do you actually go from just knowing those symbols to really understanding a company?
That's where this idea of reacting, rationally to market fluctuations comes in. Buffett has this great analogy. He calls it Mr. Market to describe how the stock market kind of behaves like it's a person.
Okay, I've heard of this Mr. Market thing.
Yeah, so he basically portrays Mr. Market as this emotional, often totally irrational character, prone to offering these prices that are way off from what a business is actually worth.
So how does thinking about Mr. Market
Yeah.
actually help investors?
Well, imagine Mr. Market comes to your door every day, right? Offering to buy or sell you stocks at a certain price. Sometimes he's super euphoric, offering crazy high prices. Other times he's in the dumps, practically giving businesses away.
So it's like his mood is all over the place.
Exactly. And the key is don't get swept up in his emotional roller coaster, You need to be able to step back and assess the situation objectively. Is this a good deal, or is Mr. Market just being, Mr. Market?
So you're saying don't react to every little market swing.
Yeah, pretty much. You can actually use those mood swings, Mr. Market's mood swings, to your advantage. When he's all doom and gloom, that's when you might find undervalued businesses to buy. And when he's overly optimistic, well, that could be your chance to sell something that's maybe overvalued. The key is to remember that the market's short-term ups and downs, they don't always reflect a business's real value.
Right, so it's not about chasing the hype.
Exactly. It's about looking beyond the noise.
That makes a lot of sense. So we've talked about really understanding a business and not getting caught up in all the market frenzy. But how do you actually find those undervalued gems?
Okay, so this is where Buffett's idea of what he calls margin of safety comes in. He always looks for businesses that are trading at a significant discount to their actual worth.
Their intrinsic value, right?
Yeah, exactly. It's kind of think about building a bridge. You wouldn't design it to handle only the exact weight of the traffic.
You want it to be able to handle more.
Yeah.
Right, just in case.
Exactly. You build in a margin of safety. You make it much stronger than it needs to be to handle, unexpected loads or whatever might happen. And it's the same with investing.
So it's like that buffer to protect against things you can't predict, or even maybe mistakes you might make.
Exactly. And this ties back to what we were saying earlier about ignoring the stock price and really focusing on the business itself. Buffett uses this great analogy. He talks about handicapping horses. You wouldn't just look at the odds to decide which horse to bet on, right?
You'd want to know more about the horses themselves.
Exactly. You'd look at their past performance, their jockey, all sorts of factors to figure out their true potential. It's the same with businesses. You need to do your homework, understand the company before you even think about investing.
He even takes it a step further. He tells students to imagine they've got this punch card with only 20 punches on it.
Punch card.
Yeah, and each punch represents an investment decision.
Yeah.
For their whole life.
Wow, that really makes you think.
Right. Like every decision counts. You can't just be throwing punches
It
around.
forces you to be deliberate, you know?
Exactly. It's not a game, it's your future. And it's not just about picking any business that seems like a bargain. Buffett has other criteria too. He talks a lot about choosing businesses that have what he calls a moat.
A moat, like around a castle.
Yeah. He's talking about a sustainable competitive advantage, something that protects a business from its rivals.
Okay, that makes sense.
Like he uses Coca-Cola as an example. He talks about how they've built this incredible moat around their business, not just through their, secret formula, but through their brand, their marketing, the way they become part of our culture.
It's true. Like Coke just has this, I don't know, this feeling to it that other sodas don't.
Exactly. It's more than just a drink. It's an experience, a memory, and that's powerful. That's what a strong moat can do.
So how can everyday investors use this idea of moats to make better decisions?
That's a great question. And I think that's what we should explore next,
Uh,
how to actually find those businesses with those strong protective moats.
It's like, think about those businesses in your own life, the ones you always go back to, even if there might be like cheaper options out there.
Oh, actually Buffett talks about that. He says if he had like a week to decide which businesses to buy in, say Tennessee, he'd immediately rule out whole industries just because they're too hard to predict.
It's that circle of competence idea again, right? Sticking
Right.
to what.
Yeah, like he specifically mentions car dealerships, trying to guess which brands will be on top in a few years or how the whole market will change. It's like impossible.
Yeah, so many investors fall into that trap, chasing trends or getting caught up in the hype. But Buffett's all about those solid, enduring fundamentals, the
Mhm.
kind of businesses that can handle anything.
So instead of trying to time the market or
Mhm.
jumping on the like hottest new stock, it's more about finding companies you really understand and believe in for the long term.
Exactly. It's value investing, pure and simple. Finding those hidden gems, those undervalued assets, and then letting them grow over time. And remember, that doesn't mean you have to be constantly buying and selling. Buffett's big on patience. Waiting for the right moment, like a batter choosing which pitches to swing at.
Which brings us back to that punch card analogy, right?
Oh.
Only 20 punches for your whole life makes you really think about each decision.
It really does. It's a reminder that each investment, it's not a gamble, it's a carefully thought out move.
Strategy, not speculation.
Exactly. And that's really the core of what we've been talking about. Investing isn't about getting rich quick. It's about building wealth steadily over time through careful analysis, patience, and that focus on real, lasting value.
So for our listener, someone out there thinking, okay, this is all great, but I'm not Warren Buffett, what are some takeaways they can use in their own financial journey?
I'd say first, figure out your own investment philosophy. What are your goals? What level of risk can you handle? What industries or businesses do you actually understand?
It's about knowing yourself, right?
Mhm.
Not just copying someone else's playbook.
Right. Learn from the greats like Buffett. Read his books, study his methods, but adapt them to your own situation.
Understand the why, not just the what.
Exactly. And remember all that stuff about moats? Look for those businesses with the strong advantages, the ones that can stand the test of time. And that goes for, even if you're not buying stock, just understanding the companies you interact with every day.
Like that little coffee shop that's been around forever. They must be doing something right.
Exactly. They've got that special something, that moat that keeps them going. And most importantly, be patient. Don't get swept up in all the noise, the market swings, the fads. Building wealth, it's a marathon, not a sprint.
Love that. And it's a marathon anyone can run, right? You
Yeah.
don't need to be a Wall Street hotshot.
Nope. It's about common sense, research, and making good choices. Choices that fit your goals.
So as we wrap up this deep dive into Warren Buffett's wisdom, what's one final thought you'd leave our listener with?
I think it's fascinating how Buffett really stresses not just the numbers, but the stories, like the
Mhm.
people, the culture, all the stuff that makes a business, well, a business.
Yeah, it's that human element that often gets lost, doesn't it? We focus so much on the data, the stock prices, we kind of forget that there are actual people behind it all, making decisions, building companies, creating the stuff we use every day.
It's true. And it makes you realize that these principles, this way of thinking, it goes beyond just, making money on Wall Street. It's about understanding what makes anything successful, a business, a project, even just a personal goal.
Absolutely, and that's what I find so interesting about these deep dives we do,
Mm.
exploring how these incredibly successful people think. It's not about just copying what they do, but about getting those those universal truths that we can all apply.
Exactly. It's like extracting the core lessons, the wisdom.
So for our listener out there who might be thinking, okay, great, but I'm not some billionaire investor. How does this apply to me? What would you say?
I'd say look around you. Think about the businesses in your own town, your community, the ones that have been around forever, the ones that just seem to have that moat we talked about. What makes them so resilient? What's their secret?
It's like a challenge, right? To start seeing the world through this new lens, noticing those patterns of success that maybe we didn't see before.
And it reminds us that, we can all learn from people who have achieved incredible things, not just in business, but in anything.
It's about being open to those lessons wherever we find them.
Exactly.
Well, on that note, as we wrap up this deep dive into Warren Buffett's world, I hope you're leaving not just with some new knowledge, but with a sense of inspiration, to think differently, to question things, and maybe, just maybe, to approach your own decisions with a little bit of that Buffett wisdom.
And remember, it's a journey. Keep learning, keep asking questions, keep that curiosity alive. The world is full of, well, you could say it's full of amazing insights if we just take the time to look.
Couldn't have said it better myself.
Yeah.
Until next time, keep diving deep.